everyone, and welcome to Cooperation Buffalo's What the Heck is Non-Extractive Finance webinar. My name is Cecilia Johnson. I use she, her pronouns, and I will now pass to my colleagues to introduce themselves. Michael?
Hey, how's it going, everybody? My name is Michael. I'm a cooperative developer here at Cooperation Buffalo. I use he, him pronouns, and I'll pass it over to Andrew.
So nice to see so many faces that I know and don't know tonight. My name's Andrew. I'm the director for Cooperation Buffalo, and I'm excited to learn with you all tonight about non-extractive finance and how we do what we do. I'll kick it back to Cecilia.
Thank you both. So we'd like to start this webinar by going through some community agreements. And these are intended to make the session as effective and inclusive as possible. So first up, one mic, please mute yourself when you're not speaking. All are welcome. Make yourself comfortable so you can keep your video on or off, your choice. You can feel free to take care of your needs at any time. Also, assume best intentions and beware of impacts. Some logistics. Please introduce yourselves in the chat. Use the chat for questions and to communicate with each other. We're also using a popcorn style questions tonight, so feel free to speak up. And we are recording, so if that affects your choice of whether or not to have your video on, we want to be able to share this with yourself later and other interested folks who couldn't be here tonight. Next up, our agenda. So right now, introduction and norms. Then we'll do an activity around your relationship to debt. We'll talk about our lending principles. We'll talk about what is lending, traditional versus non-extractive. Then we'll give some examples of non-extractive financing. We'll go over the benefits of borrowing, the stages of a non-extractive loan, how Cooperation Buffalo can help with this. We'll have a Q&A and a quick closing. So Cooperation Buffalo prides itself on using a pop ed or popular education model. What does this mean? Popular education means that no one knows everything, and together we know a lot. It is a collective group or group process of education where the teacher and students learn together, beginning with a concrete experience of the participants, leading to reflection on that experience in order to affect positive change. Rick Arnold and Bev Burke. So before we continue, we want to go over some common terms that we will be using tonight. If you need a term clarified at any time, please sound off in the chat. Finance as a verb is to provide funding for a person or enterprise. A loan is the lending of money by one or more individuals, organizations, or other entities to other individuals, organizations, etc. The recipient incurs a debt and is usually liable to repay the amount borrowed, which is the principal, plus interest. Credit history is a measure of your perceived ability to repay debts and demonstrated responsibility in paying them. A debt is something owed, and interest is the cost of borrowing money. An interest rate is the amount that a lender charges a borrower and is a percentage of the principal. Okay, next, I wanted to just take a quick moment to give a brief description of Cooperation Buffalo and Seed Commons. We will discuss more about both of our organizations a little bit later. Cooperation Buffalo is a team of cooperative business developers and educators and a community-controlled, non-extractive loan fund. We mobilize workers to achieve economic security through cooperative business ownership, generating wealth and power in communities that have historically been disadvantaged. Seed Commons is a financial cooperative made up of a national network of local non-extractive loan funds like Cooperation Buffalo that finance and invest in cooperative businesses to build on the solidarity economy. Now we are going to do an exercise to gauge where people's experiences are with credit and lending, as we are aware that not everyone has positive experiences around taking on debt with traditional or extractive lending. So Michael is going to drop a link in the chat, and this is a link to our slideshow. So if you're able, you can click on the link, and then you will be able to select one of these boxes and type in your name. And Michael can demonstrate that for us now. And then you can move this little box to where you feel corresponds on this line here with the question. So our first question, what is your relationship to debt? One being my experience with debt has been getting into a hole that's really hard to get out of. And 5 is my experience with debt has been generally positive and helped me to advance. Oh, yes, and we're on slide 8. Thank you, Michael, for calling that out. And yeah, if you have any help, please just let us know. I love the participation. Okay, so it seems like so far mostly positive or neutral. And if anyone is unable to click the link and wants us to fill out a space for you, please let us know as well. We can do that. Okay. Do we want to move on? Okay. Oh, Melanie, 5. Okay. Thank you. And one more. There's a lot of very neutral, leaning towards positive. Okay, that's excellent.
Don't we go to the next one, Cecilia?
Sure. If you didn't get to participate, there's 2 more, so. Okay, would you personally take out a loan? I'm more likely to borrow from friends and family than a bank, being 1, and 5, I would be more comfortable going to a bank for a loan. Okay. Melanie says 5. I feel like we're a little more spread out here than the previous slide.
Sorry, idea.
That was funny.
It's the magic of collaborative documents.
Okay, you're here, you said 4. I don't mean to make yours bigger. Okay, awesome. So again, mostly neutral, but maybe lean me a little more towards comfortable. Okay, and last question, would your co-op take out a loan? So if I were to start a co-op, I would be afraid to get a loan because of what would happen if our co-op fails. And 5, I would be comfortable with leveraging debt to start or grow a cooperative. Ooh.
I like Melanie's approach, not wanting to make a decision until having more information.
Agreed. And yes, no worries, Carolyn. Excellent. Okay, well, thank you everyone so much. Again, yeah, looks like mostly neutral or positive.
I have a quick reflection that I wanted to share is that it seems like on average, folks have had a worse relationship to debt so far, but seem to be more willing, but seem to still be relatively willing to take out a loan, either for themselves or for a co-op. Kind of interesting.
Yes,
I
it
don't-
does seem like it shifted a little bit.
Hmm.
Yeah. Mm-hmm.
Okay, anyway,
Yeah.
back to you,
No, that's
Cecilia.
perfect because that's our next slide, some reflections. So thank you, Michael, for going first. If anyone else has a reflection or response to this exercise, you can feel free to take yourself off mute or type it in the chat. For me, when we first did this exercise, I hadn't thought about how people have different relationships to debt and banking. I used to work at a bank. So for me, going to a bank for a loan um, was, almost not a question. So, but yes, Kathleen shares that sharing risk makes borrowing money feel safer. Indeed. Anyone else?
I can go.
Please.
Okay. I'm a first generation college student. There's not exactly anybody I can ask for money. So it's like, yeah, I don't want debt, but it's like, what choice do I have? You know?
Yes. Evan shares, if I'm going to start a business, I'd rather do it with someone else's money. Um, Melanie asks, can a nonprofit borrow as a co-op? Perhaps Andrew can speak to that later on. Oh, Andrew did already.
I think I saw Evan's hand raised.
Oh,
Oh, yeah, well, she went over my comment, but yeah, it's just if you're starting a business, using leverage money is just better because if things fall apart, then you're kind of sharing the load as opposed to if you're using your money, then you lose all of your money, and it's better to, have that fail and maybe have to pay it back over time, or maybe get into a situation where you can like settle for a lower amount than to just be out your money. Plus, it's just harder to raise that much money.
right. Having access to a large amount of capital, yes, is a challenge, of course. Yes. Okay, well, everyone, thanks so much for participating. Gonna pass it off to Michael.
Awesome. Thank you. I couldn't find the unmute button for the life of me for a second there. Thank you all so much for sharing your reflections. Like, I want to just acknowledge that talking about money and debt is sometimes uncomfortable for folks. Like I feel like slightly flushed myself just like thinking about these things. So like I just appreciate that folks are willing to come to this space and share and be a little vulnerable with us. So if you have any other reflections on that part of the chat or of the activity or anything at all moving forward, please post it in the chat and share with us. So we started off by talking a little bit about our existing relationship to debt. I think for most of us, our relationship to debt is from like the traditional forms of loans and finance, which we refer to as extractive loans. And I want to kind of introduce this new concept of non-extractive finance, like our title suggests. And so I want to start off by kind of prompting us to imagine debt in a completely different way. So imagine if we defined debt as not something that those who don't have owe to those who have. Like I'll use my example, like me, a 17-year-old doesn't have it, owes to a bank that would give me the money, but rather if debt was something owed to the commons, to everyone collectively by those who have surplus, so that it can be borrowed by those who are in need. So that's kind of like the framework that we're using here. We want to flip the entire idea of debt and also the idea of those who have and those who don't have on its head. And we believe that through the practice of non-extractive finance, we can live into that value. So I want to start by kind of contrasting a little bit of traditional versus non-extractive finance. So what do lenders typically consider when they want to give out a loan? And I'll start with the traditional side. So I'm sure many of you have experience with this. They want to know what your credit score is. They want to know what your personal financial history is. They want to know what collateral you have, which is a really nice way of saying what of your possessions they can take from you if you fail to pay back the loan. They want to know about your history. We have character here in parentheses because it does nothing to do with how good you are as a person. It has to deal with what economic experiences you've had in the past that you may or may not have any meaningful control over. Like late payments, or have you been evicted, things like that. So this is not news to anybody here, but I just wanted to kind of like lay out, here are the things that traditional lenders care about when they want to give out loans. Here is what non-extractive loan lenders care about. They care about capacity. They care about, is the loan that we're giving out going towards a project that is committed, has a good plan, has the skills ready to execute it? And does the institution that's giving out that loan have the capacity just to meaningfully support that project beyond just giving out some money and hoping to get it back? Non-extractive lenders care about cooperation. They care about making sure that the institutions that they're lending to have some sort of cooperative component to it in the structure of their business. And very importantly, they care about community and how does the loan that they're giving out impact the economic and social well-being of the community, both inside of the institution that they're lending to, and also in the broader community, in the neighborhood of the co-op, in the city where the co-op is in, things like that. So using this principle of debt is something that is owed to the commons by the folks who have, we can use non-extractive funding to economically and socially strengthen not only the businesses, the organizations that we lend money to, but in a way also use that to kind of build out the communities that they're in. So Cooperation Buffalo is a practitioner of non-extractive finance through Seed Commons. Like Cecilia mentioned earlier, we are a local peer member of a national organization, Seed Commons. And through Seed Commons, we have access to non-extractive loan capital for co-ops. Andrew just posted the link to Seed Commons in the chat. There are different organizations all across the country. These are just a few of them who are also peers of the Seed Commons co-op. LA Co-op Lab, who I want to shout out right now, who actually gave us a decent amount of the material of this webinar, is adapted from LA Co-op Lab. Bread in Baltimore, there's the Detroit Community Wealth Fund. So all around the country, there are different organizations that are a part of Seed Commons. As of about a year ago, there's already been over $15 million of non-extractive loan capital given out by Seed Commons, which is over 100 loans. And yeah, there are 30 total local member organizations. I've been calling them peer organizations of Seed Commons. So we are really proud to be a part of this community that's able to practice non-extractive lending. Okay, so some of the principles behind our lending. We want to make sure that when we lend to folks, we are building cooperative, democratic ownership within communities. This ensures that rather than focusing on the one individual and their ideas of financial success, again, that our loans are somehow benefiting the community at large. Are the workers at the co-op making a living wage? Is the place where they operate impacting the environment around them well? Are they hiring from their neighborhoods that represent the diversity of their neighborhood? Is money being spent locally so that there could be shared prosperity? We take all of these things into account. Relatedly, we care about sustainability in terms of making sure that the projects are financially make sense. You know, they're well thought out. We work with businesses to make sure that their businesses will be as successful as we can predict for, making sure they're viable in the long term and provide sustainable livelihoods. Like we don't want to, you know, we are working with a non-extractive form of lending, which we'll get into the finer details of later, but it is still a loan that needs to be repaid. So we don't want to give workers a loan that they don't have a good chance of being able to use to be successful and to actually attain their goals. Traditional lending doesn't really care as much about that as so much as them just getting their return, their money back. So that's one way we're a little different. Again, we want to maximize community benefit, distributing economic and democratic power. Another really important principle for us is radical inclusion. So when we're thinking about lending, we're making sure that these loans go primarily to those who are harmed by the extractive economy. The process of deindustrialization that's been going on for over 50 years now, and systemic discrimination and oppression for different marginalized communities. So we want to center, we do center that in all of our work. A couple more differentials between traditional lending and non-extractive. Again, traditional lending centers credit history, collateral, character. I've heard this referred to as the 3 C's. But again, character has nothing to do with if you're a good person or not. It has to do with economic factors in this scenario. Non-extractive lending, the 3 C's are capacity, cooperation, and community. So finding that contrast there. Another thing that we'll get into a little bit more, but this is a really important feature of the way we do non-extractive finance, is when you receive a loan from a traditional lending organization, you need to repay it on a regular schedule, no matter what, with very few exceptions. With non-extractive finance, the co-ops that we work with only starts repaying their loan once they start becoming profitable, and not just profitable as in they're barely scraping by as a business. We define profitable as after all of the workers are making a living wage and that their business is operating in a way that is sustainable. And if for whatever reason the businesses become not profitable for a certain amount of time, they do not need to continue making loan payments until they return to profitability. A lot of the co-ops that both Cooperation Buffalo works with and also across the country, when the COVID pandemic first hit, many co-ops were not profitable, especially in those first few months. And what happened was many of those co-ops simply paused their repayments with no penalty while they were trying to pivot and become profitable again. So that's a big deal. Sometimes we refer to the loans we give out as soft capital for that reason. Like it's very it's very malleable to the real time conditions of these co-ops, and it's centering our values, like making sure that the workers are getting paid a decent amount, for example, before we care about loan repayment. Okay, I wanted to give a few examples of different borrowers that have used non-extractive financing, as well as the types of loans that they took out when they were working through Seed Commons and with us. So a really cool bike shop in LA, they got 2 separate loans from Seed Commons. One was to expand and make improvements to their shops. So we don't just give out loans to co-ops that are like just starting out. We think about the individual needs of each co-op and what they need. Like say they're already a profitable and great co-op and like right on, they want to expand. That's something that we're able to do. Another type of loan that's sometimes given out is a line of credit, and that was to make sure that they could build out and maintain their inventory. And that was to the tune of about $20,000 and $15,000 respectively. Over in Santa Ana, there's a community land trust there called Thrive, and this was a startup loan. So they took out $60,000. They were a startup enterprise, and this was to give them the capital they needed to start their organization. And what they used that for was infrastructural build out for a leasing space for 5 different worker co-ops that were situated within their land trust. Pretty cool. I would check them out. They're a really interesting project. Down in Baltimore, to Harker Bros ice cream. I've been privileged enough to have their ice cream before. It is amazing. If you ever find yourself in Baltimore or you live there, definitely check them out. So they got a few different expansion loans. First one in 2016 for some repairs to their food truck. And then when they opened a brick and mortar, they took out another one so that they could build out their space. And then they expanded again the next year. And so they were able to get multiple different loans for multiple different goals of their cooperative business. All right, and these last two are near and dear to us at Cooperation Buffalo. The first loan that we did through Seed Commons was in 2018 when we converted an existing successful local business in Buffalo, the Rose Garden Child Care Center over on the west side, from a traditional business to a worker-owned cooperative. And so we got a loan from Seed Commons to help to finance that sale. So what usually happens with conversions, which is the way we talk about how we turn existing business into co-ops, is oftentimes the co-op itself, the new entity, will buy the business from the previous selling owner. And so that was financed by a loan from Seed Commons. And here was the initial team of worker owners when they converted to a cooperative. Anyone's Cafe and Bakery is a vegan bakery and cafe that is opening up, if all goes well, next month in Rochester. And we at Cooperation Buffalo worked with the folks who are starting up this cafe. Although it's a little bit out of our usual range, there isn't an active cooperative development organization in Rochester. So we helped them get a startup loan of a little over $69,000 to purchase the space, the equipment, and the lease agreement for the previous space where a recently closed cafe was, and they're now opening it as their own co-op. And we're really excited about that. Before we move on, I just said a lot of words. Does anyone have any questions about anything we've covered so far? We'll have a longer time for Q&A at the end too. Evan, yeah, go ahead.
Considering that you guys don't require repayment until the business is profitable, is it harder to get a loan than traditional financing? Because I can see how that could both be harder, but I can also see how that would be more beneficial to the business because they don't actually have to pay that back, which means they can dedicate more resources to growing the business. So that might actually increase your chances of getting paid back, but that could also be more risky for you all as lenders.
That's an amazing question. So we will get into it a little bit. We will get into it in depth in a little bit. So the short answer to your question is, in some ways it's easier, but in many ways it is more difficult. So like, for example, because we don't worry about things like personal credit scores, a lot of folks who would find it impossible to get a loan from a traditional bank now have access to capital in theory. So that's like a huge way that it makes it easier for folks who have been economically marginalized in some way. The flip side of that is, and we'll get into this in a little bit, is we are incredibly strict in both at Cooperation Buffalo and at Seed Commons about the types of projects that we want to give loans to. Not only do they need to show like financial promise as a cooperative to be a sustainable business, but also they need to align very closely with the values of Seed Commons. So I'll get into that in a little bit, but yes, there's more work on the front end that needs to be done to secure a loan, and more alignment between the co-ops that we work with and us in order to make it happen. But in other ways, it allows folks to get capital that otherwise would not be able to. Does that make sense?
Yes.
Cool. Awesome. Any other questions right now? Okay, well, we'll have more time at the end. Okay, let's take a 5-minute break, and then we will come back. All right, let's bring it back. I'm glad that Evan asked that really good question just now, because that's literally what we're moving into. It's kind of starting to talk a little bit more about the specifics of how these loans work. So to build off what I was mentioning earlier about how we want the organizations that we work with to be values aligned. Whenever we're working with a new project, we kind of base whether or not we want to work with them on what we call our values filter, which has 6 points. Every project needs to do at least the first 2, and everything beyond that kind of strengthens the alignment of the values between us and the project. So the first one is shift economic control to communities. I think that any project that can show that it's moving from a top-down kind of hierarchical form of economic activity to a more collaborative, cooperative, community-based would fit into that category. Democratize wealth in the workplace, very similar to number 1, making sure that things are done in a democratic and horizontal way. Advancing ecological restoration, drive racial justice and social equity, relocalizing production and consumption, and retaining and restoring cultures and traditions. So when we think about what projects we're working with, we're not just thinking about, oh, is this project going to give everyone a living wage here? We're thinking about, how does this project impact the community that it's in? Is it contributing to gentrification? Is the customer base that is thinking about having folks that live in the community that they're in? Can their neighborhood afford whatever they're selling? So these are all things that we take into account. And this is our local values filter, but it is very closely aligned with the Seed Commons values as well. Why borrow from us? What goes into a loan other than just having access to money? So when you take out a loan with Cooperation Buffalo and work with Cooperation Buffalo or Seed Commons, not only do you get access to capital, you also get support from us. We're known as project officers when we're working with co-ops. And what we do is we help with education, coaching. TA means technical assistance, which is just another way to describe, we help business do business things. And that happens throughout the entire lending process. So even before you get the loan, we make sure that you are prepared to receive the loan and eventually pay it off. And then when you get the loan, you don't repay until you're making profit. The interest is a simple form of interest, so there's no compounding or anything like that. It's just a solid rate across the entirety of the loan. And we partner with you for the entire duration of the loan to help you with working on everything from finances to management to democratic decision making, conflict resolution. We at Cooperation Buffalo and then also at Seed Commons are experts in all of those different fields, and we can help your co-op through any challenges it has throughout the entire repayment process of the loan. So we got, for example, the Rose Garden Child Care Center. We helped them obtain the loan in 2018, and they're a little over halfway through repaying it, and we're still working with them very closely, and we intend to over the next few years. And so that's just an example of how not only do you get the access to the capital, but you have support in paying the loan off and achieving whatever economic goal you had for taking out that loan in the first place. Some of the terms of each loan is there's a repayment, which is a percentage of your profit over different amounts of time. That could be monthly or quarterly. That's based off what's known as the break-even amount, which is just the time that your business actually starts making a profit and how much that is. And like I mentioned earlier, this is after worker owners are paid a living wage. We're not going to look for repayments as soon as you're just beginning to scrape by as a cooperative. And there's never any repayment before the co-op has started to turn a profit. It actually functions somewhat like a profit share, just as much as it is a loan repayment. You're giving back some of your profits to the commons, like we were talking about earlier. And then what the commons does is it use the interest from the loan repayment to help fund other co-ops. So that's what's happening with the interest that you garner, is it goes back to the commons. Interest rates, they're around they are 8% typically for most co-ops. And this can be negotiated somewhat, but for most businesses, cooperative businesses, they're at 8%. And for real estate, they're around 5%. Loan defaulting in the worst case scenario where you are unable to repay the loan for any reason, we will try to recuperate some of our losses, but this is only through buying things that were purchased with the loan. So if you are a cafe and you purchase a new oven for your bakery with the loan, we're not going to come at you to take your personal finances or assets away, but we will, because we bought that oven with the loan, we will then resell that oven. So that's the difference between like personal collateral and the specific assets bought by the loan. And again, that money just goes into the pool for other co-ops as a way that we try to give back to the commons. And then communication, like I mentioned earlier, the terms of the loan will include ongoing communication and help from the project officer, which is me and Andrew and Cecilia, and ongoing support. When is a good time to apply for one of these loans? So once you have an idea for a project, you've been working on it, you have a team, and you feel like you're really serious about moving towards opening, or you're getting really serious and understand exactly what you'll get from the loan, or you'd like to convert a business from a traditional business to a cooperative. Once your project is committed to shared ownership, shared profits, shared decision-making, your project has demonstrated the ability to implement this business, including past experience, and your project has a team. You have at least 3 people and intends to grow the membership when you can. That is when you or someone you know that might be interested in this kind of loan would want to apply for that. And we would work very closely with you to assess whether you're prepared to do that, and also support you in getting to that stage where you feel prepared to do that. Okay, that's all for me. I'm going to, in the interest of time, pass it over to Andrew, and then we'll do Q&A towards the end.
Thanks, Michael. Yeah, this is our last chunk of content before we get to have a conversation, if that's what y'all would like to do tonight. So I'm going to walk us through a little bit more specifically what this experience is like for a team that is starting a cooperative or converting a cooperative that's working with us. So these are the stages of the process with us. First, we call it the intake stage. So this is when we are gathering potential projects that are either reaching out to us or we've reached out to them. A lot of this is relationship building for us, right? Like, we think of ourselves both as business developers and technical assistance providers, but also community organizers. So a lot of this is building authentic relationships with workers in the community that are usually unable to just go on and start their own thing on their own and organize projects into forming co-ops. So the first step for a project is going to be a free initial consultation. We will sit down with anybody who wants to talk co-ops with us. It's in our blood. I live and dream and sleep in co-op land all the time, as do we all. So we meet, we discuss, we try to parse out if the project is at a stage where a loan makes sense, where an in-depth technical assistance relationship is what's needed right now, or if folks just want to gather some more research or ask how to meet people that are also interested in co-ops and that kind of thing. So we have a project, if it's ready to go, fill out a pretty basic intake form that assesses whether the project embodies our principles and values, going back to that values filter that Michael talked about in the shared principles of seed commons that we use across the network. How much capacity we're going to be required to put to the loan project. Every project is different. Sometimes there's a highly organized team of folks that have all the skills necessary to run a business and they just need the cash, and that's great. And sometimes it's a group that wants to go on a learning journey with us. So we try to assess what our capacity needs are to be able to really stick with a project through the years of the way our relationships work. And then lastly, we look for whether the business idea appears to be a sustainable business that is going to produce something that folks want and is going to be able to create surplus in the process. It's going to build wealth for the people in the co-op. We're not interested in helping people start businesses that are not sustainable for them. It means we wouldn't get the loan capital back to give to another co-op. And it also means that we're putting people in a precarious situation. So to the question earlier about, is our process more rigorous because we don't look at credit scores? Yeah, because we're really concerned with whether this business model is going to work. And life happens, business changes. So we also have to make sure that the folks are ready to pivot and think about their idea differently as times change or a pandemic shows up or things like that too. There's skills and muscles to learn along the way and to practice along the way. So if a project meets our values, passes the assessment on capacity, passes the assessment on, oh yeah, this looks like a reasonable business idea that we want to pursue it further, then we launch into an actual service agreement with a project and we head into the next step. The next step is loan prep and coaching. So again, for each project, this looks wildly different for us. We've got about 10 projects in our pipeline right now, and some we meet with weekly or twice a week, and some we meet with just once every couple of weeks as the project needs to move through the process. So once your intake form is reviewed and approved, we work with the loan project to assess the feasibility of a loan. And we use a pretty in-depth, what we call a loan memo, which is a little bit like a traditional loan application, but then goes much deeper into what's the actual business model and what are your contingency plans if the first version of the business model doesn't work out? What's your real break even? And it's a very conversational way, I think, to build a loan application, because we also want to learn the business plan that you're putting together. And we want to make sure that we're providing our input into what might make this a stronger plan, right? So we go through and fill out this loan memo. Sometimes it's a quicker process. Sometimes it can take a while for a project and all of the pieces to come together for us to do all the research to really do, to build out a budget projection and to do a financial feasibility assessment. And that can take 3 to 6 months sometimes. The next step is to go and seek approval. Yay, very exciting. So once we've completed the necessary diligence, filled out a loan memo along with the co-op team, we send this resulting loan memo to the Sustainability Committee of Seed Commons, which is the lending committee or loan committee that actually makes decisions to approve loans and money to go out the door. Because Seed Commons is set up as a national cooperative, all the full member peer funds of Seed Commons actually sit on that sustainability committee. So right now I'm Cooperation Buffalo's representative on that committee. So I get to review and give opinions about loans from all sorts of wonderful co-op projects across the country. We schedule a session to discuss and potentially approve the loan at that sustainability committee. And what happens is this approval process isn't just like a yes or no. It's usually a yes or a not quite yet. And the sustainability committee will also offer suggestions, improvements to the loan memo and some of the nitty-gritty details itself of what the business model is to try and beef this up and make it even stronger, make it even more likely that this co-op business is going to succeed, be sustainable, and build wealth for the workers of the business. So it's an iterative process. It can take multiple sessions back and forth with the committee to really wrap their heads around the business idea and to make sure that everybody feels really comfortable about what we're investing in and that it's going to work. And we've got a note here that the timeline to obtain a loan through this process could be 6 to 9 months occasionally even longer if it's a conversion that has a really protracted period where we're going through the steps of selling a business to its workers or something like that. And we've also moved quicker when we've needed to. So this is a sort of like a sobering point to say that it's a rigorous process. It's going to take a while. It's not like calling up a payday lender and filling out an application and having cash in your bank account 3 days later, but at an extremely extractive and dangerous interest rate, right? So it's the trade-off is it's often a slower process, but hopefully the business model and the business plan is much richer because of the process that we went through together. However, approval isn't the end. So for us, from our perspective and the perspective we really like to instill in the projects we work with, that's like the halfway point, if anything, right? So yay, we got the money. The next step is actually operating the business and making sure that it works. So this is really like the second half of the work. So after a loan is approved and dispersed, we follow up on a regular basis to make sure that things are progressing as planned. We usually do regular check-ins on the finances of the business and also like operational needs. How are the workers growing into their ownership roles at the company and things like that. And we pivot our counsel and advice based on what's needed, right? And these things, we don't necessarily know what they are until they come up. And through the trusting relationship we built with the projects, we're able to say, great, we can step in and support with that. Thank you for bringing it up. In this stage, co-ops likely have to modify their plan, what we call pivoting, in response to changing or unexpected circumstances. And so our project officers rely on our experience, the experience of all the project officers across the Seed Commons network nationally, and obviously the lived experience of the workers that we're working with to come up with creative pivots to keep these businesses headed in a positive direction. And obviously, the COVID-19 pandemic was a great example of extreme need for co-ops to pivot. And I'm proud that the co-ops we work with have managed to weather the storm pretty well and have really flexed their pivoting muscles over the past couple of years. And most, if not all, of the co-ops throughout the Seed Commons network have been able to really successfully pivot. And part of that success was, as Michael mentioned earlier, being able to put off loan payments, because if the co-op is suddenly not profitable, you don't still have to pay a loan payment and go further into debt or into the red, right? As a company, you put off those payments until you're at a point where you're self-sustaining again, which is really vital. And to me, is a no-brainer when it comes to how finance should operate. So that's the follow-through and pivot stage. And eventually we get to our final success, which is full repayment of the loan. And like Michael mentioned earlier, we are along for the ride with you for 2 years, 3 years, 5 years, whatever the repayment period looks like, to be coaches, to sometimes step in and help in a crisis moment, and to make sure that like we're returning this money to the capital pool so that we can then use it to fund another co-op that's maybe in California or in the South or something like that, right? It's important to us to keep this money rotating throughout the co-ops, all of the co-ops in our broader national Seed Commons network, and also in Buffalo in the Western New York region. And it's all about making sure that you're reaching sustainability. And while it's great to have a loan fully repaid and to have a co-op off on its own, frequently what happens is businesses over this time period like find that, oh, actually we're getting ready to expand to a second location, or oh, we need to buy a new walk-in freezer for ourselves. So there's often a lot of other capital or finance needs. And so we're usually stacking some new finance or new capital and continuing these relationships with projects even past just the first loan that we do with them. And in some cases, the first loan is a really small loan, like a pilot loan. We want to go test tabling to see if folks really want to buy our retail product, right? So we need a first loan of $5,000. And once we get some proof of concept that works and we can start to repay that money, we can bundle that into a larger loan to go move into the first storefront or the first rental before you then buy a building for yourselves and that sort of thing. So we're very interested in being long-term partners as well, where it makes sense. I think that's my rundown. Before I go to this slide, I see one question in the chat that I'm going to try to answer from Colleen. So the question is, for conversion loans, do we all have a required percentage of worker equity that we look for, like percentage of the loan or percentage of the entire value of the business? Like most things in our model, it depends. So there isn't a set minimum percentage we're looking for. A lot of the co-ops we're working with are folks that are in industries that are extremely low wage or extremely exploited. And so we're not necessarily looking for a bunch of home care or childcare workers to need to put up at least 10 or 20% of the business value in order for a conversion to go through. Usually in a conversion, what we do try to require, though, is that the seller also put up some of the risk for the project. So rather than us providing the full capital to buy out the seller and do the conversion, we'll like to see if the seller is willing to hold a loan note themselves or to do some kind of earn out for a portion of the value of the business so that they're able to back up the claims that they make about how valuable this business is. Like if it's really that valuable, then if you are able to earn out some money over the next 3 or 4 years after it converts, then you'll definitely get your money back. And if a seller is telling us a story that's really not true, they won't get their money back. And so that kind of helps us to negotiate the deal a little bit better. Typically, the workers are going to at least buy their own member shares in the cooperative, but that could be as low as a couple $100 each in some cases, depending on the cooperative. Okay, so now I'm going to shift, and Colleen, feel free to let us know if you have follow-up questions, but I hope that answers part of what you were getting at. So I would just want to wrap up by saying, you know, what is it that we do? I think we've sort of talked around the lending piece of what we do, but I wanted to paint a little bit broader picture of how we work with folks, and encourage anyone on this call or folks that you may know to reach out to us to start to explore if you want to start a cooperative business. We're mainly here to support worker-owned businesses starting up, but we certainly can do real estate, housing cooperatives, producer co-ops, shared services co-ops, things like that. There's a lot of variety in our network for the types of cooperative or broad community ownership projects that we engage in. So we support the incubation of worker co-ops that align with our values, like we talked about earlier. We also provide technical assistance on a fee-for-service sliding scale model to projects that maybe don't match our full values filter, but match a little bit of what we're all about. It's our way of redistributing, right? So if folks are a little bit more privileged and are able to pay for some of the work that we do, that helps us to provide more fully subsidized and free work with folks that are usually excluded from the mainstream economy. So it's important that we do a little bit of that work where we can. And like we talked about, we provide non-extractive capital to co-ops. And we also do a lot of education, training, and sort of general popular education like this workshop to engage folks in thinking about these concepts. And for many folks, it might be the first time that they're really engaging with a different way of doing things other than the traditional model. So also, if you're on this call, I know there's several of you that are not from Buffalo. Please reach out to us and we could connect you to a local co-op development organization in your region, hopefully in your immediate vicinity. But if not, certainly within your state, because we try to maintain good connections with all of them. And yes, please contact us to get that initial consult meeting on the calendar. If you do have an idea, a project at any stage, we can at least coach you through what you have to do next, even if it isn't jumping right to the loan memo process with us. Okay, and I think I'm going to pause there and see if there's any more questions or just general conversation that folks want to have. And I'm going to rely on Michael and Cecilia to point people out to me because I can't see everybody right now. I see Stanley's question in the chat about emails. I assume Michael's probably typing them already. Our main email is just info@cooperationbuffalo.org. Other questions or comments?
Yes, I have a question actually.
Go for it.
Sorry, but I was late. Can you give me like a 1-minute description of what everything is?
Well, we're recording this webinar, so you'll be able to go back and see the whole thing. But we've just talked a little bit about the sort of unconventional model of lending that we do at Cooperation Buffalo as a part of a national network called Seed Commons. And we talked a little bit about the criteria for being able to access the loans that we give out. And we just went through what the process of doing that looks like for folks that are interested in starting cooperative businesses.
Nothing for building housing?
Sometimes housing, sometimes real estate. It's not our primary focus, but we can sometimes support projects like that too. So please reach out if you've got a project that you're interested in starting.
Yeah, I do. I'm sorry I came to this late, but childcare issues, you know, but I'm really interested in this. I'm kicking myself in the butt that I wasn't able to get here on time.
No worries. Well, we'll send out the recording and the slides afterward, but glad you could be here for any part of it. Other questions?
I have a question, Andrew and Michael. I was also came in just a few minutes late. My apologies. I'm definitely calling in from Atlanta, but the work that I'm currently involved in is part of a national team to do food systems, building support systems for food systems in Western New York.
Mm-hmm.
So a lot of that work is heavily concentrated around Buffalo, Erie County, as well as Rochester, so Monroe County. So I'm assuming that you did cover the geography within the Western New York region. I heard you make reference to that. So just wanted to know if there are other areas outside of, what other areas outside of Buffalo that you may be working with in the Western New York region?
That's a good question. We're flexible in that we can cover all of the Western New York counties. I think when we originally started, we were very focused on the city of Buffalo specifically, but we've supported projects across Erie and Niagara County, and we just did supported a cafe in Rochester and Monroe County get started. And so especially in this world of working virtually, it's quite a bit easier for us to to reach out across our region, but we consider ourselves really place-based. So it's important that we know the place where we're working in. And so if it's not in our immediate neighborhood in Western New York, we would try to find another local partner that does similar work to us in other regions as well.
Wonderful, thank you.
Yeah, totally.
Andrew, Heidi, I just wanted to lift up a question from Heidi in the chat. Have you had any co-ops pay off their debt already? If so, what kind of co-op was it? And I already responded that in Buffalo, the closest co-op we have is a little over halfway through loan repayment. And I know that there are examples on the national level, but I can't think of any off the top of my head. Do you know any, Andrew?
Well, I know for a fact that Red Emma's Cafe in Baltimore has paid off at least one or two of the loans they took out 5+ years ago now, but they've since come back to Seed Commons for more money. They just recently bought the building that their cafe is going to be moving into, which is really exciting. Just a whole other level of commitment when it comes to financing. And I know there's others across the country that have fully repaid as well. Yeah. All right. Last call for any other questions before we, I think, wrap it up for today.
You may have answered this question. I apologize if you have already. Is there a minimum and a maximum for the loans that you offer?
Very good question. No, there's no hard and fast rules about it. We have done what is essentially micro loans, especially if projects are in that sort of pilot stage. I remember approving one last year for like $900 for a group of students to start tabling, doing a juice business, right? So sometimes it's that simple. And the largest loans that we've done were real estate deals. So the Red Emma's buying their building in Baltimore, I think was just about $1 million. And I think we did a combined 1.5 million for a couple mobile home parks that became resident owned in Asheville, North Carolina. So it runs the whole gamut. If it's the right amount of money and makes sense for the business plan, then it's going to make sense to us. Obviously, like, you know, if you're starting a cafe and not buying a building and need $1 million, we would look really carefully at those financials and make sure that's a good investment. But if it's, you know, if it's in the $50,000 to $100,000 to $200,000 range for a startup, that's typical depending on the industry.
Okay, thank you.
Mm-hmm. Great question.
And I'll take one other one if I may.
Go for it.
I saw free consultation.
Mm-hmm.
Okay,
Yeah,
one.
all of our initial consultations are free. We're not that worried about being compensated, especially in the exploratory phase. And even if it takes a couple meetings to really figure out if this is a project that's going to work for us, we will meet a couple times to make sure. So we're not too strict about that either. At a certain point where we're reviewing an intake form for a project, we ask our board to get involved in helping us make the decision about whether we take a project on, and they'll tell us really clearly, yes, start working with them at the full subsidized amount. No, they need to find somewhere else. Or yes, we could work with them, but they need to be on our sliding scale because they meet some, but not all of our values. But that happens once we have an intake form completed with you, and that can take a little while sometimes.
Thank you.
Mm-hmm. All right, well, let's wrap up. You have our email addresses in the chat. Please don't be shy about reaching out if you have more questions after this too. And I know we're going to send a follow-up survey about how the webinar was, because feedback is really important to us. And so you can also talk to us more through that space. I'm going to highlight a couple upcoming workshops and events. This is not everything we have going on, but it is a snapshot of some of the big ones that we've got coming up later this year. We have a half-day workshop that we call Worker Co-op Jumpstart happening in May on a Saturday, which is all the business basics and some of the broader ecosystem basics that you would need to really dive into the world of being a worker co-op. And so it's a really fun event. I'm looking forward to doing that again this year for the second year in May. We're also going to be hosting a panel discussion, hopefully in person, depending on how COVID treats us this summer, on June 15th. We're calling it Talk to a Co-opers. We're going to invite some other actual members and worker owners of co-ops in Buffalo to come and hang out with us and talk about their experience being in co-ops. And so it's an opportunity both to build a relationship with folks in the co-op world here in Buffalo and to get some real questions answered about what it's like. And then we have this is going to be our 4th year doing our multi-week cooperative academy training course in the fall. We do it in the fall every year. There's an application process that'll be opening up around June. And this is if you've got a project and at least a team of a couple people that are ready to really dive into building out a business plan and a business model. So this can be sort of a soft way to develop these skills with a team before you decide you actually want to take on a loan. Many of the projects that go through the academy then start working with us to go through intake and to go through a loan memo after the fact when they're ready to launch. And there will be more on our website about the Co-op Academy and more through our newsletter and stuff like that. And I think you'll be asked if you want to sign up to join our newsletter in the survey that we're going to send out. So that's it. Thank you all so much for being with us tonight. I think we're maybe going to drop the survey link in the chat now, but we'll also email it out as well to all of you. And yeah, please reach out if you would like more information, if anything sparked your interest. If you're a partner in another part of the country, we'd love to hear from you. And importantly, if you're in Western New York and thinking about starting a co-op, let's talk. We have loan capital, we have some know-how, and we have a lot of eagerness to help you on your journey. So thank you all so much and have a great night.